Hey everybody, Jonathan Rose, owner, masters in trading. Unusual option activity. We're seeing a ton of it in FedEx, FDX. Look at the power of this move too. FedEx has gone from 150 up to 230 in about 2 months. There's some real institutional buying behind this move. FedEx, at least in my opinion, is going to go higher. They release earnings this Tuesday, September 15th. Let's look at the stock. First thing I always want to do, guys, is I want to look at correlations. I want to look at comparisons. So what do? We look at FedEx against UPS. Pretty much the same company, right? Going back to 2015, if we start them at the same point, if you would have invested $1 in them, pretty much have the exact same return. You can see here in 2018, 2019, it looks like FedEx got really expensive relative to UPS. They came back in line, FedEx broke, then they kind of jostled around here, jostled around, really just moving together. But let's go and look at the unusual options activity that we found. Here's our brand new Masters of Trading unusual option activity screener. This has not been released. It's going to be released this week. More information to come. If we look at the overvalued section, today is Saturday, September 12th. So looking at the options volume from September 11th, 5 standouts. One of them is FedEx. Now, this came to my attention because I've been seeing FedEx on this screener quite a bit. So if I go here, put in FedEx, it's going to show me all the times that FedEx is shown on the overvalued unusual options activity scanner. September 11th, September 10th, 9th, 8th, 4th, 3rd. Quite a bit. Now, just to show how unusual this is for this scanner to catch FDX on these 6 days, if we leave this and we just search overvalued and we search this month 153 results out of 16,000. Now 153 results, FedEx on this date just happens to be one of them, but it keeps coming up. And when names keep coming up on this unusual option activity scanner, we like to say, where there's smoke, you can probably expect to find some fire. So FDX keeps coming up on this scanner. FDX again. FDX again. So right here, if I just want to isolate and only look at FDX, I can just plug it in there. And then this month we can see we've already had 6 different results. And this is a big one. This is one of our proprietary scans. More information on that to come. But now let's look at FDX because I want to show you just how powerful these orders are. Now guys, I have no doubt something big is cooking in FedEx. Most likely it's going to be released with their earnings this Tuesday after the close. But look at the volume, guys. This was the volume from Friday. This is the underlying stock volume. So let me put this in perspective. The underlying stock traded about 5 million times. The bid, the ask over the course of the day traded 5 million times. This strike alone, guys, the 250 strike, it traded 6,495 times. Now, options have leverage. The stock is at 232. If the stock rallies $20, it'd be at 252. If it gets the 252 within 6 days, 6,495 options are going to be in the money. Whoever owns these is going to be long 649,500 shares of stock because one option equals 100 shares. So if this person, if you look at this like it's a 600,000 share order, the overall volume is 5 million. This alone is about 13% of the underlying volume, but there's more. 6,000, 5,000, 3,000, 2,500. If we add all these up, call it 20,000, 200,000, 2 million shares, guys, right here. 2 million shares is darn close to half the underlying volume for the entire day. But if we add up all the volume, the institutions are coming into the options market because the underlying stock can't stomach the size of these orders. And it's all right here. If we go into further out expirations, we're getting some activity, but not nearly as much. Now, open interest collects all the volume. The volume is just for that day, just for that day. So further out, we're not really seeing that same kind of activity like we are 6 days away. 6 days away, this is just a monstrosity. Look at the calls too over the puts. So again, we like to say, guys, where there's smoke, you could expect to see some fire. If we go back to the tool, they started buying these September 3rd, 4th, 8th, 9th, 10th, 11th. They are buying options. How do I know that? Implied volatility, 61. The next day it's at 68, then 77. It looks like it downticked here just a little bit, right back up. And here, I'm not sure exactly what strike this is. This appears to be an in-the-money strike. That's why the IV is considerably lower. But still, percentile of IV, it's darn close to the highest percent that these IVs have traded. So 100%, 81, that's the high for the implied volatility. It looks like this strike, 64, maybe traded a little bit higher, but it's damn close to the highs. So how do we play it? Well, a couple of different things we can do. This is going to be a little bit of a high risk, high reward because all the action is 6 days. So you're going to know whether you're a winner or a loser real fast. Now, how I'm going to play this, these 250s right here, if you can get these for 550 mid-market, what about 250 and maybe 300 or 250 buying, selling something down here? So if you buy these for 550 and you sell 275s for $2 as an example, that's 350, 550 minus 2. It's 350 invested. If you do that 10 times, that's $3,500. That's your ultimate risk, $3,500. You'll lose that if the stock stays under 250. But using this example of a $25 vertical call spread, the most that you can make is if the stock gets above 275, then you look at 25, the difference between the call spread. We're going to do that 10 times. That would be $25,000 less the $3,500 that you spent to get in the position. So you'd be making what? $21,500? Better than a sharp stick in the eyes, is what we like to say. Other confirmations about this trade, guys. Looking at UPS, the two of them are strong. This trade makes sense for the new economy as well, with everybody shopping online. I don't know. Usually when you see something like this, there's a reason. Again, where there's smoke, there's fire. Let's see how it plays out. Jonathan Rose, owner, Masters of Trading, and this is FedEx Unusual Options Activity.